You're out with the latest report as well on the state of China's economy, which showed revenues, profits, hiring, wages as well in August, all slowing from a year ago. What is the latest data showing you?
Yeah, look, the Chinese economy started off on a very strong note, I think, at the beginning of the year. But it was looking pretty clear that from that point onwards, there was going to be some moderation. And in August, you're certainly seeing this mild slowdown. Now, that said, the roof isn't exactly collapsing. And I think the market has been way too pessimistic on China. The data are actually somewhat boring, I'd say. You're still getting a modest recovery through the course of the year. So we're not anywhere near a crisis. But if you're looking for a rally in the equity markets, yeah, you're not going to like the figures that just came out.
One of the most well-known equity market names that's attached to the Chinese economy is Alibaba, quite frankly. And there's been a little bit of an about-face that we've seen between their relationship with government and now making it through this period where they were under high scrutiny. What does that signal to you about how the region is approaching publicly traded entities and just business as a whole?
Yeah, look, I think the idea was we're going to cut Alibaba down to size. That's what Xi and company wanted to do. And I think they feel like they've done that for now and maybe forever. This does not, I think, spell a change in the overall approach towards business and in the overall approach towards regulation writ large. As the policy environment changes there, I think we could see fresher companies coming under crackdowns. We could see the national security lens that they've taken about every company, every sector. That remains dominant in China. So policy risk is perhaps receding. It's not going away.
What does that mean for ByteDance then?
Look, ByteDance, they've made it clear. They're not going to let them sell the algorithm. They're going to maintain total control. TikTok is controlled by the Communist Party. That's the fundamental reality.
What does a trade war with China look like? What does that frame that for us?
Yeah, it can take a couple of different shapes. First of all, you've got the tariff war, which is, I think, the most blunt instrument you can use, right? Come up with anything. What is made in China? Put a tariff on it. So it could be sector-wide, industry-wide. It could affect a lot of goods. Then you get to the more sophisticated parts of it, which is where you start getting into things like export controls. You can get even more aggressive and sophisticated and do things like real outbound investment controls, work with Congress on things like raising de minimis rules as they affect packages coming in, Shein and Temu packages that come in today. So it just depends on how sophisticated and how aggressive the person occupying the White House wants to be.
Do you think we get to the point where U.S. companies, I think about a Walmart operating Sam's Clubs in China, I think of Starbucks, that they somehow get kicked out of the country?
Look, anything is possible. Nationalization is even a bigger risk. Those companies have decided that they are in China, for China, forever. And I think the real goal is how do you bifurcate that? How do you let American companies and foreign companies work within China, so long as the Communist Party allows them to, while protecting national interests, core national interests? That's a big debate in D.C. and people are still trying to figure it out.